JustEatTakeaway.com, which is Europe's largest meals delivery company, has reported a smaller core loss than expected for the first half of 2022 and revenue just below analyst forecasts. Let's take a look at the numbers. As the company reported first half orders of 509.4 million meals. Estimates have been for 546 million. So that was shy of what was expected. Revenue coming in, as you can see, is just a touch less than the 2.8 billion that analysts have been looking for. This compares to a revenue of 2.6 billion in the same period last year. So that was up over the year-to-year comparison. The adjusted pre-tax was for a loss of 134 million euros, improving from a loss of 189 million in the same period last year. But when you're looking at 2.6 billion euros of revenue and you're getting a loss of 134 million euros for the same period, you do have to start asking questions. And these are questions I've been asking for a while now about these last mile companies as to just how it is they are going to turn a profit. And this remains the problem. If you look at the share price chart, I think this is really what's been bugging the investors in this business, and traders see the potential value on the downside because when we saw this record high in the stock all the way up at 100 euros and 50 cents, that was going back to October 2020. And of course, that was right in the height of the lockdowns globally. And this company was really benefiting from this, with people ordering meals and obviously wanting to stay at home, having to stay at home, but wanting to have the benefits of eating someone else's prepared food. So they go to restaurants, use Just Eat Takeaway. But since then, it's become more and more obvious that it is difficult to turn a profit. Now, we've seen almost 90% loss from the highs that we saw back in October 2020, all the way down to the recent lows. This candle down here at 11 euros 17. Since then, we have seen a 46% uplift in stock. And in fact, the stock is up 1.8% so far today after 2 hours worth of the session. So there is an appreciation of perhaps maybe that we have already possibly seen the lows. But the same questions remain. How does this company make a profit? Only when we look out to future numbers, we're really going to find that out. One other thing that was a little bit of pressure building in the numbers recently, and that is what the company is going to do with the Grubhub acquisition we saw back in 2021. Today, it's reported an impairment of 3 billion euros for that acquisition. So it's already beginning to write that off.